Well, certainly the story of today, which in my opinion is the story of the day, is the buying that we've seen in the US fixed income curve. You've seen the 10-year moving down about 4 basis points. Nothing too substantial. We'll have to see how this trade is going to European and US trade. We've seen the 30-year, the longer, the ultra long end of the curve moving down fairly sharply as well. And I think that's something we need to keep an eye on, because if we see further bids coming through there and yields moving lower, then the US dollar is going to go down with it. It's a reflection that people are saying that the Trumponomics trade, this idea of reflation in the economy, is potentially being unwound, and perhaps it's gone too fast too soon, and that US dollar may come under further pressure as a result. Now, if you look at the dollar today, we've seen dollar yen moving down to where we are now, around that mid 114 level. We've seen euro dollar pushing back above 106, Aussie dollars moving into the sort of high 74 into 75 cents, and we've seen a call from some local banks that we could see it going up towards 78 cents. Certainly the Australian dollar seems to be the trade du jour at the moment. Everyone seems to be buying Australian dollars. It seems to be having its time in the sun, specifically against the sterling at the moment. We've seen sterling Aussie moving down quite sharply over the last few days. It's a trade that we've been looking at very closely, and I suspect that there's further downside in there as this momentum really builds, and as we go into the UK Supreme Court's decision on the parliamentary's involvement in triggering Article 50, and of course, you know, what happens with the Brexit negotiations with the self-imposed deadline of the 31st of March. So I think sterling Aussie goes down further from here. That's a trade we've been looking at, but certainly, as I say, the move has really been what's been happening in the US dollar, and there's been some good speculation that perhaps we can go down further from here. That's the derivative of that move, of course, is that we've seen gold prices just shy of that $1,200 mark today. We'll see if we can crack through there as we go into European and US trade tonight. That will be very much driven by what happens with fixed income and US dollar flows as well. But certainly we're seeing good moves into the US, into gold. They're moving up slowly but surely there. In the equity front, well, you know, we've seen a good strong start to the ASX 200, but for the fourth day in a row, the market's just been very happy to sell into that initial strength. I tell you, it tells you something quite about the sentiment we're seeing. The buying has come through in our energy and mining stocks, but we've seen some good solid selling coming through in REITs, and we've seen some selling coming through in healthcare as well. And I think that healthcare reflection of what we saw in US trade, where of course Donald Trump talked openly about what's happening in the healthcare space and potentially having to go for bid for those mandates going forward. But certainly, you know, the ASX relatively flat on the day, but it's come off certainly the early morning high. Chinese market's relatively flat, so there's no real move in US futures, and our opening calls in Europe are fairly mixed at the moment. Certainly the IBEX looking a little bit weaker on the moment. No specific economic data that I really have been focusing on today, but it's really about the US dollar, and a lot of people are speculating this potentially could go a little bit lower, but I think we've got to keep our eyes on US fixed income and the bond market there.